my chips, I'm getting rich. Running up digits, counted up 6 stacks. My money flipping, let's take a trip. Splash, standing on business, tycoon rich. I'm rich. Look at my chips, I'm getting rich. Running up digits, counted up 6. My money flipping, let's take a trip. Splash, standing on business, tycoon rich.
All right. Good morning. Good morning. Happy Tuesday, everybody. Happy Tuesday. Let's see. Hold on one second. Get this sharing going for you guys. One moment, please. Let's see here. All right. Excellent. Okay. Great morning, everybody. Sorry about that. So this morning, as we always go over, we are trading the NASDAQ index. Okay. The futures NASDAQ. And I'm going to talk about what it is, what it's comprised of. Then we're going to talk about the strategy that we use when we're looking to trade NASDAQ. And we're going to talk about some concepts that help us along the way and how we kind of leverage, the money, using other people's money to basically profit the most out of the situation. Okay. So with NASDAQ. All right. So NASDAQ is the index that caters to investors interested in innovative growth-oriented companies like Apple, Microsoft, Amazon, and others, offering a diverse selection of industry leaders driving economic progress and technological advancements. So these are some of the companies that are comprised within NASDAQ. You guys are already familiar with Amazon and Microsoft and Apple, right? But you also have Adobe, you have Cintas, Intel, Paychex, okay, Monster Beverage, all right? So a lot of familiar companies that you all have heard of, Raw Stores as well. So we trade the performance of this index to see how the market is affected based on a day-to-day basis, whether it's through news or how people are feeling their sentiment about the overall index of NASDAQ, okay? So let's talk about concepts, all right, and how we actually trade NASDAQ. So with NASDAQ, we look at the first thing we do before we do anything else. And great morning to everybody that's joined. Okay, great morning. The first thing that we do is we look at the market condition. Okay, we look at the market condition. That's extremely important. Before you do anything, no matter what your trading strategy is, you should always know what type of market condition you're trading in. Okay, so there's 3 types of market conditions. 3 types. The first one we'll talk about is consolidation. Okay, so with consolidation, you're going to see your candles kind of move back and forth like this. Okay, no matter what type of strategy you have, when there's consolidation, it is extremely difficult to be profitable in these type of conditions. You do not want to trade when the market is consolidated. Okay, you do not want to trade when the market is consolidated because the market is indecisive. So it doesn't know if it wants to continue to buy or if it wants to continue to sell, or if it wants to buy at significant points or sell at significant points. Okay, so that's why consolidation is not the most ideal situation. Now, the next market condition is the ranging market. So with the ranging market, what you'll see is price kind of moves up and down in ranges in a specific area for a specific period of time. Okay, it doesn't range forever, but it does range for a specific period of time. Okay, so it looks kind of like a roller coaster, if you will. All right, and so when you're looking at ranges, you want to be conscious of a couple of things, okay? And I'm going to break down all of these market conditions on the actual chart so you guys can see it. But what you want to recognize is that at the bottom of the range, think of it if you're at the bottom of a roller coaster. The next reaction for the bottom of the roller coaster is for it to move up. If you're at the top of a roller coaster, the next thing you want is for the top of the roller coaster is to move down. Okay. And so we look for buys here. Okay. Because we want price to go up. We know when we look for buys, we want price to go up. Okay. Then we look for sells at the top of the range because we're looking for price to go down. The great thing about futures, and one of the things that make it, in my opinion, recession proof, is that you can take advantage of the market when it's going down or when it's going up. Most people have the idea that you can only be profitable when the market moves up, but that's not the case. Okay, that's not the case at all. All right, so remember, in the range, these are the conditions that we're looking for. Why? Because price, if you always look to the left for the past, right? You can see where price sold off, okay, multiple times. So it's telling you every single time price comes up to this specific area, it wants to move down. Or every single time price comes to this area here, it wants to go up. So the top here, this is called resistance, and then the bottom here is called support. Okay, and I'll talk about that in detail as well. Okay, so that's your range. So then you have a trending market. So with the trending market, there's two different types of trends. You have your uptrend, where price is clearly trying to move up. Okay, that's your uptrend. And then you have your downtrend, where price is clearly trying to move down. Okay, trying to move down. And so when you can identify your market condition, you can come up with a strategy that makes the most sense, or you can execute the strategy that makes the most sense. Okay, if you had two situations, let's just say you had a cheetah and a fish racing against each other. Well, of course, the cheetah is going to win on ground, right? So, but if you put the fish in the water and the cheetah in the water, well, of course, the fish is going to win because they are able to operate in the best condition that's most conducive for them to win. And so when you're looking for trading, you want to look at the best condition that's most conducive for you to win. Okay? So let's go look at a visual of what consolidation, what ranging looks like, and what trend look like, right? An uptrend and a downtrend. Okay, so we'll go back a little bit. I'm gonna navigate over to the chart. 1 second, guys. Okay, so let's go ahead and switch over here. You guys should be able to see my chart now. All right, excellent. So right now I'm currently in an open trade right now. If it changes, during market open, then that's fine. But if not, that's fine as well. Okay, so let's go look at this price action that's happening here. If we see what's happening right now, I'm gonna zoom in a little bit. Notice how right here we have price moving to the side. Okay, there's a lot of what we call choppiness. Okay, especially right here. So I want you guys to put your eyes on this area right here. Right here, this is consolidation, guys, where price is just kind of choppy. It's moving up and down, wicks everywhere, right? You cannot make money in these type of conditions, okay? This is consolidation. Price is moving back and forth, back and forth, back and forth, okay? Now, but if we look to the left here, we can see, let's see. If we look to the left here, we can see how price is clearly moving up, okay? So this will be considered an uptrend. You can clearly see the direction. Whenever it's trending, it's clear as day, okay? So we have higher pivots, right? So this pivot here, this pivot right here is higher than this pivot. This pivot here is higher than this pivot. So you're creating higher highs and higher lows. The low of the pivot, this one is higher than that one. Okay? So when you see that, and you can see that price is clearly moving up, and of course the 200 helps us with that as well. But when you see that, that lets you know that you want to be looking for buys. When you see a clear uptrend, you want to basically put yourself in position where you're clearly looking for buys. Okay, for buys. Now let's look at a downtrend scenario. Okay. Oh, actually, before we do that, we can look at this area right here. Okay. So if we look at the bottom here, this is our floor. Okay, this is our floor. I'll talk about that in a minute. And this is our ceiling. This is our ceiling. Okay. Probably could move it up a little bit more, but that's good enough, right? So with the floor, your floor is your support. Okay. Your floor, let's go back. Hold on, let me pull it back up. Is your support. So I'm going to put this back here. This is our floor. Okay. That's our support here. And so what happens is, because the floor is your support, you want to use this as a strong foundation to look for buys. Okay? So think of a ball. Here's your floor. You throw the ball down to the floor. The natural reaction is for price to go up. Okay? That's the natural reaction, is for price to go up when you're looking at that. Okay? So your support, when you're at support, you want to look for buys because you want that ball to bounce here and then go up. We know the overall direction for buys is for price to go up. Okay? For price to go up. So if we look at this right here, we can see that price came to the floor multiple times. So when it came down to this floor here, okay, what did it do? It went up. Came back down to this floor here, same area, right? Look to the left, same area, okay? Went up. Came back down to this area, and what did it do? It went up again. Okay, so that's 3 times that price touched this level. This is what we would consider a key level. Key levels is when you see significant buys or sells at a specific price point on the chart, and you see multiple buys and sells at that level. Here's buy number 1. Here's buy number 2. Here's buy number 3. All 3 of these, okay, are indications that price wants to buy at this area. All right. Now, let's look at the resistance, okay? So resistance is your ceiling. Okay, that's your ceiling. Okay? So here's your resistance here. Right? And now think of it like the same analogy. If you throw a ball to the ceiling, what's the natural reaction? For price to go down. For price to go down. You throw the ball to the ceiling, what's the natural reaction? For price to go down. So what this means is price is resisting to move past this area here. That's what resistance is. Okay? So resistance is the ceiling. Okay? Resistance is the ceiling. So when we look at this structure here, okay, here's our ceiling. All right. Price came up to this area here. What did it do? It went down. Price came back to this area here. What did it do? It went down. Came back to this area. What did it do? It went down. Came back to the same area. Went down. Okay. So if you look left, this is 1, 2, 3, 4 levels of where price sold off at the same area. It doesn't have to be exact, but the same area. So this is a key level because there are more than 2 touches or more than 2 scenarios of price selling off around the same area. Okay, so this is definitely a strong level of resistance. So when you tie all of this together, okay, we have our ceiling, we just went over our floor. What we are looking at is a range where price is just ranging in between, okay, ranging in between this area right here, just ranging, okay? And so when you're in a range, we look for buys at the bottom of the range. When you're in a range, we look for sells at the top of the range. Okay, that's extremely important to note. Buys at the bottom, sells at the top. Okay, so that's a range. Now, let's see if we can find a downtrend. Okay, let's go look for a downtrend here. See, and this is a strong uptrend that we're witnessing right here, guys. Very strong uptrend here. Okay, but let's see if we could see. Here's our downtrend right here. Now, the downtrend, you can clearly see that there are pivots made, right? Some consolidation, and we got a drop here, pulled back here, another drop, right? Another drop, pull back, another drop. Okay, so significant drops here. So let's look at this. Now we're looking at lower highs and lower lows. So these are the lower lows, the bottom of the pivots. These are the bottom of the pivots right here. Okay, every pivot is lower than the previous pivot. So that's a clear indication that we're in a downtrend. Okay, now what we're also experiencing is lower highs. So here's our pivot here, the top of the pivot here. These are lower highs. This high is lower than this high. This high is lower than this high, and so on. Okay, so this is the downtrend. Whenever we're in a downtrend, we want to look for sales because clearly the sellers are in control. And that's all this is a tug of war between the buyers and sellers. Who has more money to move the market in the direction that they desire? Do the buyers have more money? Okay, cool. Then we're probably going to be in an uptrend. Does the sellers have more money? Okay, cool. Then we're probably in a downtrend. And if they're kind of tied, well, then you might see like a range or consolidation if it's no clear decision. Okay, so those are the market conditions. So let's go see what market conditions we're in right now. And then once we identify that, we're going to look at our rules. Okay, so right now, looking at what we're seeing right here, okay, we're kind of moving sideways right now. All right, so this is like this is similar to like a range kind of, all right, a wide range, right? Some consolidation in between it, but if we look at the consistency of the movement, it's a wide range, right? So let me just go here. It broke out, right, and then it came back in. So let's just look at the consistency of this level here, okay? And then we have a consistency of this level right here, right? And so we see multiple sell-offs here, here, and here. And then we see multiple buys here and here. Now, we have a different concept in the academy where we talk about the 20 and the 200. But I won't go over that today, okay? So that's what we're looking at. So considering that, we can see that there's multiple resistance at this level, but there's also support at this level as well. Okay, support here and then support here. So what we're looking at, the two levels that we're looking at for possible entry, let me see if I can pull my levels back up. Okay, for possible entry, it's this 21,281.25 level, right? So we look for BPC to break here, or we look for BPC to break here. Okay, these two levels right here. Let me move this down here. Okay, so these two levels right here. All right, so let's talk about what is a BPC. All right, and then we're going to talk about the strategy. So because we're kind of moving in a sideways action, we're going to look at the ranging strategy. So let's go back to the ranging strategy. And great morning to everybody that's joined. Great morning. Okay, and let's see. So for a range, guys, we want to look at a couple of things. The range says step 1, use the STC indicator via TradingView on the 15-minute chart to determine directional bias for the trade. So let's go back to the chart. Okay, let me pull up my STC. Let's see here. Oh, it kind of went off. Hold on one second. Let me pull it up so we can have it on the chart here. Okay, and then I'll explain it in a minute. Okay. All right. So what we're looking at right now, because we're moving sideways, and when it says the 15-minute chart, this platform right here I'm on is TradingView, but the chart time is right here, guys, at the top right here. Okay, right in this area over here, and all it means is if we're on a 15-minute chart, it takes 15 minutes for each candle to close. If we're on a 5-minute chart, it takes 5 minutes for each candle to close. So that's what that means, 15-minute, 5-minute chart. Okay, so if we're looking at this STC right now, currently, we are what we call oversold. Oversold. All right. So when you're oversold, you want to look at the dynamics of how the market pretty much sold off. Let me see if my pen wants to work today. How the dynamics of our market wants to sell off. Okay, so what you guys want to realize is that the market never just moves straight up and it never just moves straight down. There has to be pullbacks and there has to be pivots in the market because there are both buyers and sellers in the market. There's not just straight buyers. There's not just straight sellers. If there weren't buyers and sellers, then the market wouldn't operate or move the way it needs to move. Okay? So looking at the STC right here, okay, right here at the bottom, we can clearly see that the market is oversold. So if we're looking at that roller coaster scenario again, remember, when we're at the bottom of the roller coaster, we expect it for it to go down. So the STC right now looks like this. Okay, looks like this. So the next expectation is for price to potentially go up. Okay, for price to potentially go up. All right, so if price goes up, I would want to see a BPC entry based at this key level right here for a possible movement to the upside. Okay, I want to see a BPC entry right here at this 21,360 level for a possible entry to the upside. Okay, so let's look at this and let's talk about BPCs. Okay, so BPCs helps you to understand clear entry points. All right, it helps you to understand clear entry points. So we're actually going to look at this entry point right here at the cross of this 200 right here in the 20. Okay, so let me do a quick rewind, and we're going to break this down from both a bearish BPC and a bullish BPC. Okay, so let's look here, and let's use this one right here. Right here, this is good. Okay, so let's imagine that here's our line right here. Let's just say that this is a key level because it is, right? This is a little key level right here. All right. So the first thing I'm looking for when I'm looking at a BPC, I'm looking for a breakout. That's what the B stands for. I'm looking for a breakout. Okay. So I want price to break past this key level. That's considered a breakout for me. Okay. Past this key level. That's the first thing. The second thing I want to see is a pullback. Okay, a pullback. So with the pullback, that's what the P stands for. You want it to stay kind of within the same proximity of your key level. Okay, if it just comes back completely reverses, then that might not be a valid pullback. Okay, and then the last one is the C. That's continuation. Okay, BPC, breakout, pullback, continuation. All right, so if we're looking at this example here, we go to the next candle. There's our pullback. Okay, so my line is actually a little off here for the breakout, but let's just see that real quick. It's about right here. Yeah, about right here. That's our line right there. Okay, so this green candle broke out of this key level right here. Okay, tighten it up just a little bit. Okay, this green candle broke past this key level. That's number one. So we can check that off. Okay, we can check that off. Now, pullback. The pullback comes back to this area here. Okay, it pulls back to this key level, so it never just comes slamming back down. It just kind of pulls back a little bit, right? So that's a good pullback. Okay, so we can check off the pullback. Okay, now let's look at the next candle and see what happens. Okay, continuation. So I like to see a clear break past my my bullish candle, and I like to see an engulfing candle. This is a great continuation setup move right here. Okay, a great continuation setup move. So that means we have our breakout, we have our pullback, we have our continuation. So now that I know that, I'm going to enter my trade. Okay, I'm going to enter my trade, and I'm going to take it up to the next key level. And in this case here, I would have probably taken it up to about right here, right? To where this area is here. So let's play it out and see how that worked out. Okay, let's see how that worked out here. So I'm going to play it out. Okay, and we can see right there, TP hit. Continuation to the upside. Okay, if that pullback came all the way back down here, then we know that the buyers aren't in control anymore. But because that pullback was small or wasn't as significant, and that continuation was strong, you would have hit your take profit. Okay, so that's a BPC. So when we're looking at the market today, that's exactly what we're looking for, BPCs. Okay, we're looking for BPCs when we want, on the upside or the downside. Okay, so let's see if we can find a BPC example on the downside so you guys can get a clear visual of that. All right, so let's see here. Let's see what we got here. A nice down, a nice bearish BPC. This probably going to be in our, take my levels out, guys, so it's not too confusing for y'all. Let's see here. Okay, here we go. This is significant enough. All right, so let's zoom in here. Okay, and let's just say this is our level right here. Okay, let's just say that this is our key level right here. So if we zoom in and we see what's happening here to the left, let's do a replay. Let's go back to about right here. Okay. What do we see? Let me tighten this up a little bit. There we go. Okay. So with the downside, with a bearish BPC, we want price to move in the opposite direction. So we need a bearish candle to break our level. We need a pullback back to the level of resistance, and then see if we can get some continuation. So let's go ahead and play it out here. Let's go see what the next candles look like. Okay, still support. There's our break. There's our break candle. Here's our pullback right there. That candle right there. Let's look at what the next candle does. Okay, still pulling back here. That's still a pullback, guys. It can be multiple candles. As long as it stays within this area of resistance, it is still a pullback, okay? All right, and let's see if we can get that continuation candle that we're looking for. Let's see. Okay, so it's consolidating a little bit right here. Still pullback. There we have it, right there. So here's where we found support, right? This candle broke past where we found support here. So there's our continuation candle. We play it out, and you can see that price continued to move to the downside. Okay, let me switch this to 10 real quick. There we go. Yep, so price continued to drop to the downside. Continuation. Okay, BPC, guys. All right. So that's what we are looking for today when the market opens. All right. So let's get out of this replay mode. And let's go look at where we are right now. Okay. So we're looking for a BPC here, outside of this area here, or a BPC, a bullish BPC on the upside and a bearish BPC on the downside. Okay. Let me take this out so that's not a confusing level here. But that's what we're looking at for today. Okay. So with that being said, we use this concept to make profit. And so some of the things that traders may struggle with are two things. They either don't have the skill to make the money, and they might have the money, or they don't have the money but have the skill. And so with the prop firm that we're using, they're saying, okay, if you have the skill, you can basically trade off of a funded account. And so we use a concept. We use a company called TopStep. And so with TopStep, they're saying if you pass, and I'm even more clear now on why people may not fully understand the concept of this, but with TopStep, what they're saying is we have the money, we have the funding. We're going to allow you to trade off of that money, okay? If you can prove that you know what you're doing, if you can prove that you are a sustainable trader, okay? And so with TopStep, they're saying that, all right, once you prove that you're a good trader, we're going to take you to step one, which is the express funded account, okay? So there's three different types of accounts that you all could pretty much look at. The first one is the $50,000 account. Then we have the $100,000 account. Then we have the $150,000 account. The reality of it is, most people don't have $50,000 sitting in their account. Most people don't even have at least $2,000 in their savings account, just based on the way our economy and everything is set up. Okay? So with this concept here, and even if you did have the money, let's say you did have the $50,000 here, or the $100,000 or $150,000. If you could put yourself in a position where you don't have to put your money at risk and put yourself in position to trade off of someone else's money, that's a win-win situation. So it's a win-win for TopStep because they have the funding, right? And what they're saying is we're going to allow as many traders to trade their accounts. And if they win, well, that's a win for them because they just got gain. They just basically accumulated gains without having to do anything. If they lose, that's okay because we're accumulating subscription fees anyway. So it's a win-win for them, right? But then for you, it's basically a win-win as well, okay? So instead of you putting up $50,000 of your own money, or even $500 of your own money. So let's run through that scenario. You have trader A, and then you have trader B. So trader A says, you know what? I'm going to put up the $50 and get access to a potential $50,000. Okay? Now, granted, there might be some resets and stuff like that in between, right? But at the end of the day, you're not risking $50,000. That's not even close. Okay? Trader B says, I'm going to put up my own money. I'm going to put up $500. I don't have $50,000, but I'm going to put up $500. Okay? Both traders took the same trades. Okay? And they accumulated about 15% gain that month. 15%. Okay? So with this 15%, trader A put up $50 and gained 15%. And so now their profit is $7,500. 7.5K. Okay? Trader B put up their own $500, and their profit is $75. Same 15%, same trade, but the difference is Trader A decided to leverage the opportunities and resources that were presented. So Trader A put up 50 to potentially make 7.5K. Trader B put up 500 to potentially make 75. So Trader A put up less to make more, and Trader B put up more and made less. Okay? So now let's talk about how to scale this, right? Because then once you have your accounts going, now you can start to copy those trades, right, from your own accounts. And you can scale this all the way up to $750,000, okay, at a $150,000 account. 750K, okay? So that same 15%. So Trader A had made 7.5K. Trader B made $75. But Trader C did that same 15%, but they had $750,000 worth of funding. And because they had that amount of funding, now they're in position, okay, to make over $112,000 that month. $112,500 to be exact. Okay? This is where life starts to change. Okay? Because now you're putting yourself in position to make over $1 million a year based on leveraging OPMs. Okay? Other people's money, OPMs. All right? So that's what we're in the process of doing, guys, is a $50,000 to $750,000 account increase. And now we've added some attributes to the academy where you're not just trying to use the NASDAQ live, right, at 9:30, but we also have other opportunities in the market where you can take trades during different times of the day from different markets. So when you combine all of that, you put yourself in position to hit this mark again, okay? To hit this mark. So with proper risk management, with discipline, with following the rules, you will get there. Especially now the market is starting to kind of settle down a little bit more, so things will be a lot better, hopefully in the near future. But that's the opportunity that we're looking at right now, guys. Okay. So let's go over to news. So because every day that you trade, you should be looking at news. So for those of you all who aren't familiar, this is forexfactory.com. forexfactory.com. Okay. So today we do not have any red folders, which is good. So hopefully we'll see some volume in the market during the market open. Okay, because sometimes when it's news and it happens before the market opens, sometimes that's where all the volume of the market goes. But today we do not have any red folders. And so what we do is we look at Yahoo Finance to get some more intel on what's going on. Okay, so NVIDIA is looking at a nice little move right there. Wink, wink, right? This is that's a nice little move. But that's what we should be able to see some of that performance within NASDAQ as well, because NASDAQ has comprised some of the top tech companies in the United States as well. Okay, so when you take into account all of those factors, that's what helps you to make the best decisions when you're trading in the market. Okay, that's extremely important. You have to watch. You have to be conscious of the news, because you could be in a nice buy setup, right? Or a nice sell setup, right? And because you did not check the news, your entire trade was wiped out. Your entire trade was wiped out. Okay? So if you're in a winning position and the news happens, you want to go ahead and set it at break even so that you don't lose your money. Okay? So money. All right, so it's 9:23. Okay, I'm going to go back over to the market here, and we will see what the market wants to do. It did find support here. Okay. So we'll see how it responds when if it comes back up to this level right here. If it wants to give us a nice BPC and we take it to the upside, or are we going to get rejected again like it did here in the past, and we have to look for a different avenue to get into the market. Okay, but those are the things that we're looking for as far as today's trading. And if you guys have any questions or anything, feel free to let me know. But that's the basis of our trades. Okay, so now that we have that pretty much clear, and that everything is clear, I want to talk about risk management for a couple of minutes before we get into our trades here. Manage how much you're risking on your trade. It does not matter how often you win. Eventually, you will wipe that account out. Okay? Because with every winning streak, there's also a losing streak. All right? So when that losing streak comes in, you want to be able to secure and hold as many profits as possible from when you did go on a winning streak. Okay? Now, I'm not saying that the losing streaks happen often, but when they do, you have to be prepared for that. You cannot just get into your trades aimlessly. So if you have a $50,000 account, right, from Top Step, what we just talked about, the risk every day should be around $500, no more than $500. So if you have one position in and you're risking a full $500, well, then you don't want to put in any more positions. But if you have one position in at $100, well, now you have another $400 to risk. Okay? So how do you measure that? You can measure how much your position is in multiple ways. Let's say we entered, let's just say a buy right here, right? And I like to use, for buys, I like to use a long position tool. So let's say we entered here. Let me grab that 1 second. Okay. And so I like to do, especially for NAS, around 0.7%, but for right now. Okay. Let's use this little, about a 1-to-1 ratio. Okay. Risk to reward 1-to-1. Okay. Now, if I right click and I go to create limit order, I can say, okay, my stop loss would be here. So I will be risking $136 with one contract. Okay. If I put in 2 contracts, of course, that changes. Now I'm risking a different amount. I'm risking $273, okay, to possibly gain. In this case, it would have been $282. So $282, and I'm risking $273. All right. So that's the basis of what we're looking at when you're measuring your trades. You have to be able to know this before you enter. If you're just getting in and putting in any amount of contract, you're doing it wrong. You're doing it wrong. You have to know how much you're risking before you enter the trade. That's extremely important. I can't emphasize that enough. All right. So let me go ahead and get this out the way here. And we are about 2 minutes away from market open. Okay. 2 minutes away from market open. So let's see how price responds at both of these levels here. Okay. So it's going to be interesting to see that we're closer to this level here. So the closer we get to the key level, I like to go to the 1 minute to see what's happening. Okay. Go to the 1 minute to see what's happening. And then we kind of make our judgment to see if we're going to get into a BPC based on how it looks off of the 1 minute. The 1 minute helps us to get into the trade faster. Okay. It helps us to get into the trade faster. So that's so good. That's really good. Okay. So let's see here. We have about 1 minute and 10 seconds, guys. 1 minute and 10. And let's see how the market wants to perform or respond today. All right. let's take a peek at our volume order flow while we're waiting too. So let's go to the 1 hour and let's see how much money we have moving in the market today. Let's see here. All right, so I'm gonna open up the volume order flow so you guys can see it. Hold on, that's not there yet. Let's see. Here we go. Okay. And it's going to pull up. Let me just hide this 1 second because we don't want to see all of that. Gets a little noisy there. Okay. So what we can see here is that the we do want to see the shadow profile. Okay. What we see here is that there are about equal amount of sellers and buyers, a little bit more sellers right now. Okay, my stop loss just hit on that position. Right now than are our sellers, which is why we see price trying to push down. But when we get to this level right here, there's a significant level of buys and sales. There's more buyers than sellers. Okay, so it's 9:30. The market is open. So let's go to our 5-minute and take a look at what's happening here. Let's take a look at what's happening. Okay, and I'm going to hide this volume order flow for right now. But right now, it's looking like where we do have a little bit more buyers than sellers. Okay, so let's see what happens. Let's see what happens. And we're getting a nice pinch. For those of the students that are familiar, we're getting a nice pinch off of the 200 and the 20 right here. Okay, so if we get past here, because we already got the crossover here, we're getting a pullback here. Here's our pinch here. Let's look at the 15-minute and see if we're getting that same type of pinch. Not yet. Not yet. So we want to see that BPC right here at this level right here, guys. Right here at this 21,360 level is where we want to see a potential BPC. Okay, let's see if we can get that. Or we might see one on this side here. But what we have to be cautious of is this 200 sitting right here, because this can serve as a strong level of support when you're in your trades. Strong support or resistance, just depending on where price is. But based on where price is right now, we're looking at support. Okay, we are looking at support. So let's see what happens. Let me go back to my 5-minute here. All right, nice break of the 200 on the 5-minute. Okay, let's go to our 1 minute now, guys, and let's see what's happening. There's our break. Okay, there's our breakout candle. Let's see if this pullback stays valid. It needs to stay at or beneath this this key level right here in order for it to be valid. Okay, at or beneath this key level for it to be valid. Right now, it looks like the buyers are trying to push back here. So this candle here was an extreme fake out. This red candle right here. If this candle does not close beneath or at this key level. Okay. So now if I do get into a sell, I'm just going to get a horizontal line right now because I don't have my stop loss right here in front of me right now. Let's see. I will put my stop loss right here, 21,271.50. Okay, so that was a valid pullback. It closed beneath the key level. Okay, closed beneath the key level. But we need to see that continuation. We need to see strong continuation. So I'm going to get my sell ready. I need that thing to break past that level in order for me to respond to that candle. So let's see here. Stop loss will be at 21,271. 21,271.50. And then my take profit, let's see. I'll figure out the take profit afterwards. But I'm going to probably do, let's see, it's only at 72. So I can do 1 and 1. Okay, so I'll be in 2 positions, 2 contracts for NASDAQ. Okay. Here we go. 5 seconds left on this candle. Okay, price is still at or beneath near this key level right here. Now let's see how this next one responds. If that candle, if we get a bearish candle that breaks past this area here, then I'll be getting into a sell. Okay? Because then we will see a full foundation of a BPC. Okay? But it has to break past with a solid body in order for me to even consider getting into a sell for this trade. Okay? For me to consider getting into a sell for this trade. All right, nice, not bad. But I got to let it close. It has to close in order for me to do that. Let me go ahead and copy my, oh yeah, that's a good one. That's a good one right there. We got 13 seconds. 13 seconds. Let's see. I got to let it close. Don't want it to be a fake out. All right, not bad. Let's see. Hold on. We right here by this level right here. I need more. All right, I'm in a sell. I'm in a sell. Okay, I'm in a sell. And then let me get in one more sell as well. So I'll be in two positions here for my stop loss sell. All right, two positions there. Okay, so there's our sell right there, and stop loss is already in position. Take profit. Let's see. Let's see where the take profit would be. Let's see here. Okay, so TP1, 21,184 is TP1. 21,184 is TP1. And then TP2, let me zoom out a little bit, see what we got going on here. TP2 will be right here at 21,135. So those are my two levels. Those are my two levels. 21,184 and then 21,135. Let me type that out, and then I'm explaining the BPC in a minute. Okay. Let's see here. Let's see if we can hit at least TP1. And then if we hit TP1, then I'm going to go ahead and move my stop loss to break even for the second position. Okay. So stop loss 21,271. Okay, 0.50. TP1 is 1,018. And then my TP2 is 21,135 even. Okay, so those are my levels. Let me go ahead and put that into the chart here, into the chat, I'm sorry. And let's see how we play out for today. Let's see if we can get at least a TP1, and then we'll see how TP2 plays out if we can get down to that level right there. Okay. And this price moved kind of fast today, so it's still early on in the move. Okay. But let's just see what we got going on. Let's go back to the 5 minute here. Okay. See what the 1 minute is doing. All right, not bad, not bad. Let's see what we got going here. Okay, so let's look at the BPC while we're waiting for the trade here. Let's look at the BPC here. I think I had it. Let me see. Might have went away. All right, but let's just break it down because you guys already know what it means now. But when we look at what's happening here, so we did get some continuation, but let's see if we can get continuation down to this level right here. We'll see. All right, but let's just look at it. Here's our breakout candle right here, this red candle. That candle broke past this level. That's our breakout candle. Okay. Then we had a pullback. Okay. These two candles right here stayed within the area of our key level. It didn't come all the way back up. So this is a valid pullback. the body of the candle didn't come all the way back up. So that's a valid pullback. Okay. Now, what happened after that was we had continuation. Okay. This candle right here, the body of this candle broke past. Let me go back. The body of this candle broke past this level right here. Okay. And so that's where we can see the continuation. Now, will we continue down to this level? Right? Or will we reverse here? That's the question. How far will we continue? Okay. So the assessment was correct, but now we have to figure out, okay, how far are we going to continue? So let's go look at the 5-minute and let's go look at our volume order flow to see how much money is moving right now in the market. Let's see how much money is moving right now. Okay, so based on where we are, it's saying that there are more sellers in this area than there are buyers. So there is a chance that we could get continuation, but let's go look at the 15-minute too. Okay, let's go look at the 15-minute because we are right here by the 200 on the 15-minute. But based on the 15-minute, it's saying that we do have a lot more sellers than buyers. Okay, so this can go one way or the other because we're sitting at the 200 where it can find support, right? But it's saying that we have more sellers right now. So we'll see how this plays out, guys. Okay, let's go back to the 1 minute. All right, so it looks like, okay, it's finding a little bit of resistance there. Where was our past support, right? Could possibly be our future resistance. So we'll see how this candle closes though. There's 5 seconds left on this one right here. If the wick closes beneath, then we might be okay. But if the wick closes above, then I don't know. We might get if we get a W, then we're going to have to reassess where we are. Okay, if we get a W. All right, but let's just see what happens. Let's see what happens. We have our stop already in place. We already know how much we're risking on this trade. Okay, and now we're just trying to measure and see if it's going to continue to the downside here. Okay, let's see if we're going to continue to the downside here. We have about 25 seconds left on this candle. Okay, and let's see what happens. Let's see what happens, guys. Let's see what happens. Okay, and now here's another thing too. This is what I call a double bottom. Now, let's say if price does come back down in this area and it finds support again, then we need to go ahead and break even, because what might be happening is we might be looking at a double bottom, which tells us that price is trying to find strong support here, right, in the W structure and move to the upside. Okay, and move to the upside. So let's see what happens for these next couple of candles to kind of determine how we should manage this trade. All right, let's see what happens here. And it could find support sooner than that, right? It doesn't have to come all the way down here. So let's see if the sellers have enough strength to push price back down, or are the buyers going to take control of where price is at the moment. Okay, but that's what we're looking at for today, guys. So let's see what happens. At the end of the day, again, you should already know how much you're risking for your trade. Okay, you should already know how much you're risking for your trade. All right, so we're getting a little bit of pushback here. Okay, now what I'm looking for is to see how price, if we get down here, how does price respond? How does price respond when we get right back down at this area? Are we finding support here, or are we going to break through? Okay, so let's just see what happens here. Okay, this candle is pretty significant. It's pretty significant. We got 27 seconds left, though. It's a lot of time left on it. Let's see what happens. It's all about how the candle closes, not how it opens. If you're making a decision on the candle on how it opens, you're making the wrong decisions. You don't want to make a definitive decision on a candle that hasn't fully decided what it wants to do. Okay? That's extremely important. All right? So let's see what happens. We have we got a new candle now. So let's see how this one plays out for us. All right. Let's see how it plays out. All right. Looks like we are definitely finding support. If this thing breaks past the 20 right here, it is definitely finding support. If it stays beneath this area right here, we still have some level of play here because we could be looking at an M, right? But it has to stay in this area right here for it to be an M, okay? So we could be looking at a W or M. The W, you'll know it's a W, is if you see, because we already see this structure here, if it breaks past here, then we're looking at a W for continuation to the upside. But if it's an M, we'll see the double top here, right? And we'll see resistance multiple times at this level right here. And then we get some continuation to the downside. So the way that this candle closes will kind of help us determine. All right, so it's right there at the tip. So let's see. I don't know. Let's see how this next candle plays out. This next candle will have to come down if we're looking at an M. If it continues to go up, then we're definitely looking at a W. Okay? So let's see how this plays out. The sellers got to come in strong now if they want to hold price at this around this level right here. So this is like the ultimate deciding factor right here. Okay. All right. 22 seconds left on this candle right here. We're still under this level here, but let's see if we can stay. Let's see if we can stay. 10 seconds, guys. 10 seconds left on this candle right here. Let's get in a little bit closer so we can see what's happening. All right, there's a little bit of rejection there. Okay, let's see how this next one plays out. A little bit of rejection right there. Okay. All right, this is a fresh candle. Let's see if we can get some resistance. Don't look like it though. These buyers are pushing back. They are pushing back. They fighting right here at this level right here. It's going back and forth. When you see it's back and forth, you got a lot of buy and sell orders that's coming in to figure out who's going to push price a certain way. If it's more sales, then it pushes price down. If it's more buys, then it pushes price up. Okay? So let's see what we get. Let's see what we get. I'm going to go ahead and hide this volume order flow here. Okay? Here we go. 5 seconds. Looks like the buyers are taking control. Might hit our stop on this one right here. Might hit our stop. But again, you should already know how much you're risking. And you should not be risking a whole lot, especially the way NAS has been moving recently. Okay? So, as you can see, it's only $137, $44 right now. So most, if it does hit the stop, it would be around $150, $160, something like that. If it does hit the stop. Okay, and let's see how it looks on the 5 minute. Is this a pullback on the 5? Okay, so it's right under the 200 right here off the 5 minute. So let's see. Oh, it looks like it's trying to break through. Yep, it's trying to break through. That's what we're looking at here. Sellers trying to fight, but that 200 looks like the buyers are trying to break past that 200 on the 5 minute. They trying to fight, but I don't think they're going to win, to be honest. Yeah, buyers are taking control now. Yep. All right, so stop hit, okay? So I only risked about $150, $160 on that trade, okay? And so now what we are experiencing here, okay, is a pinch off of the 200. Pinch off of the 200, okay? So we have, but that was a pinch off of the 5 minute. We know that we're looking for pinches off of the 15 minute, okay? And so if we get a BPC that happens past this area here, that's not a bad entry, y'all, if y'all want to get back in, okay? It's not a bad entry if you want to get back in. But right now, that was an extreme. We got down here. Our stop loss was right here. So we missed our stop loss by a couple of inches here. Price came all the way down here, and we missed our stop loss by a couple of inches. So now price is reversing, which tells me that the buyers are trying to continue to push price up here. If you get a BPC at this level, and it's a clear one, take it to the upside. Take it to the upside. Okay? So that'll wrap it up for this session for today, guys. Pretty quick session. Some volatile movement here that we just experienced with NAS. But again, that's why we're not risking a lot of money on this pair, because it just has not been consistent. Like, we can even see the consistency of the candles here, just alignment with NASDAQ. And so then it went back to moving back and forth. So that's what we're looking at for today, guys. We're going to go ahead and wrap it up. And I'll catch you guys next Tuesday, same time, 8:45 a.m. 8:45 a.m. And let's keep building this thing. Make sure you like, subscribe. All right. Hit that bell notification. And I'll catch you guys later. Peace. Enjoy the rest of your day.